So there are a number of factors that are contributing to the volatility in this market. And until we're able to get some clarity on one or more of the issues, it's hard for me to see a world in which the markets become less volatile or start moving up into the right in a consistent way. So what are those? We have $30 trillion of stimulus that has hit the US economy since 2008, 9 of it since COVID. The Fed is trying to correct some of the inflation by increasing rates, but there's no clear path as to how far the Fed will go. You have supply chain issues. You have COVID uncertainty. You have Russia, Ukraine. There's too many unknowns in the market that we haven't dealt with in the recent past, and it's become very difficult for us to factor all those into the broader economy. And so any one of those that gets worse is going to have investors teetering on the edge of their chair and create more volatility in the market. So what's really interesting is that private investments and public investments often behave really differently. See, in public investments, you have all this volatility. So many different things that can drive a price of share higher or lower, and that's created all this volatility. In the private markets, however, you're really investing in that particular business or asset or manager, and the specific performance of that investment is what drives your outcome. So let's get specific. Why has this year been so strong? Well, one, our investments continue to perform in line with expectations. So since inception and through the different cycles, 91% of our matured investments have achieved 0.5% or greater than what we had projected that they would perform. Two, this year alone, in 2022, Yieldstreet has distributed $500 million back to its investors. It's our highest in a single year, and we're not done the year yet. Three, I'll call out some individual performance that's pretty exciting. So we had our highest return by a single investment in our Williamsburg multifamily restructuring offering. That returned approximately 41% net annualized return. We had a private equity offering in a GP stakes business whose current return is over 25% net. We have our first fund investment in the aviation space whose net investment to date has been in excess of 30%. And listen, the tide's really shifting. In 2021, the private markets have raised over $1.2 trillion. That was money that often would otherwise go to equities and bonds. And when you look at it, the younger demographic of ages 21 to 40 have shifted to only having about 25% of their investments in the public markets. The rest are being moved into alternatives. And so what you're seeing is this massive, massive push from the smartest investors, the institutions, the endowments, the funds, the RIAs, et cetera, telling their clients or investing on their behalf in private markets, moving away from the stock market volatility, not wanting to see 25, 30% drawdowns, but wanting to participate in more stable cash flow, in better growth opportunities in private markets. And at Yieldstreet, you have the opportunity to access that across a large and diversified set of offerings. If the public markets continue to dip further, more and more folks are going to realize, hey, it's really time to diversify out of just being in public markets. I need more of my money in private markets. And so I think you're going to continue to see the private markets grow. If public markets continue to rally back and get stronger, I also think that the private markets will too. People will have more cash to invest, and they'll remember that just a few weeks ago and a few months ago, they experienced an incredible amount of volatility in their portfolio. As the asset class goes, the private markets are going to continue to thrive as companies and executives recognize that it's easier to attract more appropriate capital for their businesses from the private markets. Why? Because there are so many different types of lenders and investors that there's the right fit for every company somewhere in the private market. So people are also wondering at this time when everyone talks about recession and it's covered in the media and the markets are down and they don't know what's going on, like, what do I do? So things are happening all over that are way beyond our control. What we can do, though, is take a step back. Now's the time maybe not to get that purchase, maybe not to spoil ourselves as much, to have a little bit more self-control, a little bit more restraint, think about our financial health, think about financial stability. But I think we can all take a step back, maybe for those who have been spoiling themselves a little bit, do it a little bit less and each at our own level, but to be more mindful, more financially stable, more financially healthy, and find those opportunities that you can invest in that are going to create a more stable and healthier financial future for you and your family.